Welcome back on the Pursuit of Wealth, traders and investors. It's Rod with Pow Group, your home for MJ stocks, crypto assets, news, and interviews. Today is Monday, October 27th. Hope you had a great weekend. And in this video, we're going to be discussing how to trade symmetrical triangles. We'll go over what they are. And like I said, we'll give it an example and a tutorial on what I find useful and how I would approach it. And hopefully you're able to utilize it in your trading as well. Before we get to it, make sure to smash the like. If you're new, you can subscribe, tick the bell, you'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. And you can follow us over on X as well, formerly Twitter. The handle for that is @GroupPow. Going to be using that as one of my platforms of choice going forward. So there's multiple indicators, signals, patterns that we can look at. And what I normally tell people, I've said this in my advanced course, I've said this in the Pow Group private community, and when I do coaching and just overall kind of recommending things to people, is you want to figure out 8 to 10 indicators, patterns, and signals that you like to follow, right? 8 to 10, whether it's a golden cross when the 50-day moving average crosses the 200-day moving average as a golden cross. When it happens in reverse, it's a death cross. So there would be two. Maybe you identify a head and shoulders. Maybe you look at a EMA 12 and 26 bull cross. Maybe you're looking at a descending triangle and ascending triangle. You're looking at uptrends versus downtrends. So like I said, 8 to 10 different indicators that can go bearish or bullish. And then of those 8 to 10 indicators, look and see how many are bullish and how many are bearish, right? If you've got 8 out of your 10 indicators that are all showing bullish, right? They're showing a head and shoulder, or they're showing an inverse head and shoulders. They're showing a weekly EMA 12 and 26 bull cross, a daily golden cross lining up, an uptrend on the weekly time frame confirming, right? You're going to be more confident in the direction, right? Same thing on the flip side. If you've got 8 of your 10 indicators that are bearish, then you're going to be more confident that you're going to see more downside. And we can utilize things like the POW algo alerts to give us early buy and sell signals to help time trades as well. And it's just a great way to not have to monitor the charts all the time and just wait for the alerts to come to you. And like I said, you can basically just react to these alerts versus having to spend hours and hours and hours in your charts. And here's an example of it. So I like to use this custom indicator. It's called the bearish triple thunder crossover. So when the price is dropping below the 10-week moving average, and we'll just bring up an example here on Flare. You can see here when the price is dropping below the 10-week moving average, you have a weekly MACD bear cross and stochastic bear cross. When all three of those things happen simultaneously, you'll get an alert. And you can see here it happened right into this top here in this symmetrical triangle. So a symmetrical triangle is literally, as it sounds, it's a triangle that you have your essentially your peaks and your troughs, and you have your resistance levels, and each high is lower than the previous high. And then same thing with the support. Generally, each low is a higher low compared to the previous low. But what's very common in these symmetrical triangles, especially to the downside, I've seen it a lot more in the downside, and XRP is notorious for that. But this goes for anything, not just crypto. It can go for stocks, any kind of asset that you're charting. But you can see here that generally we hit these supports, we hit these resistances, and then we pull back or we bounce. And then as we get close to the apex, as we get close to the tightest point, you're going to see usually a fake out. And whichever way it breaks out is typically the fake out. So in this instance, it broke to the downside. So the chances of this breaking bullish are increasing, in my opinion, because typically you see that fake out to the downside and then the real move. Conversely, if we were to see the breakout happen here, if we would have broke out here and then came back within it, that would have been a bear trap bull trap in my opinion, and the real move would have been bearish. In this instance, I think in my opinion, this was a bear trap and a fake out to the downside, and then we're going to get the real move more than likely going to be up. And then how you trade it, you just take your target. I like to use the real candle body, so I'll take that top of that real candle body of this apex, and then to that real candle body, and then you just move it out to wherever you break out of this. So if we broke out here, you would move it to there. If we go all the way to the apex, you would just put it there, and then there's your measured move. But let's just say hypothetically it broke out of this triangle, that would be your measured move. So that's how to tell where you're going to be heading in terms of a target. Now, here's an example of XRP, right? We go from this ascending triangle again, symmetrical triangle, again, using the real candle bodies. You move it out to where we broke out, and you literally can't make that stuff up. That's exactly where the price went. And I'll just remove these blue bars here, but as you can see, that target is literally where the price went, so you can't make this stuff up. It's pretty incredible. And the blue bars are actually just, in case you're wondering, are just Bitcoin's adoption and rise over time. And I overlaid that over the XRP chart, and you can kind of get a sense or clues that we're more than likely going to see a similar kind of bull and bust cycle. And that's exactly what we've been seeing. It's been pretty much verbatim here at the moment. But as you can see, we right at the end, right at the tightest point here, we broke to the downside, and that was your fake out and bear trap, and then the real move came. So again, you'll see these breakouts to the upside, and then usually that's a fake out and bull trap. But again, when it happens to the downside like that, generally that's the fake out before the big bull move. So that's one way to play it. So that's an example of XRP, and you can identify assets too, right? Like the next time you see a symmetrical triangle on XRP, because you know it's notorious for doing so, and then seeing those fake outs, you're going to be cognizant of those fake outs. And when you see these triangles, it's going to increase your odds of wanting to take that trade, because you know that typically that's something that XRP does very similar, like very frequently. And similarly, Flare is, like, if you recall, just for holding XRP, we were airdropped Flare when it first started, right? So Flare has a lot of ties to XRP. It's actually using F assets and basically bringing DeFi and smart contracts to projects that don't have it natively built in through their layer ones. That would be an XRP, and they're starting with XRP. So they're very focused on XRP. So it makes sense that Flare would kind of mimic that of XRP's trading. And that's exactly what we've got here, is a Flare symmetrical triangle. And we could see an EMA 12 and 26 bear cross here, leading to more downside on the weekly time frame, but the monthly time frame, we're close to seeing a bull cross of those EMAs. But here's an example of how to time like entries and exits, for example. So if you recall, I did a video not too long ago. It was called My Bold Move, and I sold 90% of my Flare. This was posted a year ago. Let's just get the exact date here. And apologies, I should have had this up, but it'll only take me a second here. So this was posted on February 27th, 2024. And I said, my bold, selling 90% of my Flare to buy XRP. And at the time, XRP was around like 50 cents. Don't quote me on the exact price, but we'll just take a quick peek here, actually. So February 27th, 2024. So if we go over to XRP, February 27th, 2024, year rate here. So the price was at, around 50 cents. So as you can see, it was at 50 cents, and then Flare was pushing 5 cents. So as we got close to, that, you're not going to know that this is a symmetrical triangle then. That's not the case. That's not why I'm explaining this. But the reason why I'm explaining this particular example is because, I was identifying a trade here. I figured Flare, they've got the monthly Flare drop still going on, so they're adding more to the supply. And, I just didn't really think that we were going to see much appreciation here until those Flare drops were done. There's 4 months left. So I said, you know what, I'm going to sell 90% of my Flare. And I was able to sell Flare around 4 cents. And then, I was buying it under a penny, well under a penny. And then I was able to sell it at 4 cents, and I got a lot airdropped to me as well for being an XRP holder. So I sold that around 4 pennies, and then I bought XRP when it was around 50 cents. And then now XRP is at 264. So I actually sold some XRP, I think it was 2 days ago. And I bought a bunch more Flare, and I'm almost done buying Flare. I might buy 1 or 2 more times, and then I'm just going to take advantage of the monthly Flare drops over the next 4 months. There's 4 left. And then I'm also delegating, so I'm getting rewards every 3.5 days. So here's an example of how you would trade it. So that was, knowing what I know with Flare and, the tokenomics, that trade just made sense to me. And then as I started to identify this symmetrical triangle, it just made sense that it would do something similar to an XRP. But here's an example of how you do it. And it's very simple. Obviously, you want to be adding closer to support, and you want to be selling closer to resistance. But if you're looking for a trade, and generally you want 3 touches, right, to identify a pattern. So if you enter here, obviously you're not going to know this is a symmetrical triangle. But we were heavily overbought on the RSI, so that was one clue. Then we were oversold on the RSI, and then that's where you start to identify this symmetrical triangle. And then after this top here, you're like, okay, this is definitely looking like a symmetrical triangle. And then what you want to do is identify your risk tolerance. So if you're entering here, let's say at support, and you're using this support as your stop loss, if you're going to set a stop loss, typically you want to allow some wiggle room, because they'll do exactly this. They'll go stop loss hunting. They'll try to fake you out and do a bear trap here right as we're breaking out of that symmetrical triangle bearish. So what I would do is use the lowest point in the chart. If you're holding it for the long term anyway, it's probably the best just to do it from the lowest point on the chart, because they're probably going to fake you out. Or on the flip side of that, you can just allow a little bit of wiggle room, whatever you're comfortable with, and then wait for the bounce to start. So once we started the weekly bounce here, breaking the high of the previous candle, you could have entered there and then set your stop below that low. That's another way to do it. It just depends how aggressive you are. You're holding for the super long term, or you're just doing it as a swing trade, day trade. Well, this is more than a day trade because it's on the weekly time frame. It's going to take a while to play out, likely months. So, you can identify that. And then you can also utilize the POW algo alerts for these bearish patterns that are forming, or bullish patterns. So for example, let's say you didn't get a chance to, let's say you wanted to take a short and you're looking at this high right here. You enter the short here, and you can also utilize the bearish triple thunder crossover. So when we were at 3 cents, 3.5 cents, I think it was, right? Yeah, 3.5 cents. You can see that Flare had a bearish triple thunder crossover forming. We lost the 10-week moving average. The stochastic was going to cross bearish, and then the MACD cross bearish, and then we got the follow through. So you can use that algo alert, and just knowing what that is and looking at these, again, identify 8 to 10 different signals, patterns, indicators. Like I said, I like to use the 10-week moving average, the weekly stochastic, and the MACD. I like to use the weekly moving averages and the daily moving averages, all the 50, 100, and the 200. And then I like to use the EMAs, exponential moving average, 12 and 26. And then I look for, like I said, death cross, bull cross, look at golden cross, you look at uptrends on the weekly time frame, downtrends. So identifying those. And then as you would see here in this case, that bearish triple thunder crossover gave us, and then as you've identified the symmetrical triangle, that you can use that indicator, right, that custom indicator, the bearish triple thunder crossover, and say, hey, we're lining up for a very bearish time here, and we've already identified this as a potential symmetrical triangle. There's a good chance that this is going to top out here. And then you could even entered when we started weekly consolidation, losing the low of the previous candle, and then you could have short right here. So it would have been that candle right there, and that would have been a short opportunity of 60%. And then you could do the same thing. So as you're approaching this support here, you could wait for the weekly bounce to start, and then you could say, hey, we're approaching support here in this symmetrical triangle, and now we have a bullish triple thunder crossover where the price is getting above the 10-week moving average. We have the stochastic crossing bullish on the weekly, and the MACD set to cross. So as you see all of those things happening, and an EMA 12 and 26 bull cross, right, and a weekly uptrend confirming, and the weekly bounce is starting. So the play here would have been to enter here when the weekly bounce started, and it would have been upside potential of around 100%. So that's how you would do it. And then in terms of your stop, if you're shorting here and you were looking to get that 60% opportunity, 70% thereabouts, then you would set your stop above here, right? So you would enter at 3.8 cent short, and you would set your stop above 5.6. So essentially you're risking about 48% to make 70%, but there's all kinds of different risk profiles. So you just have to identify what it is that you're comfortable with. And, that's just an example from a short perspective. But long perspective, you could enter here, but always remembering that they typically go stop loss hunting and faking out, kind of see a fake out before you see the real move. So, and then again, another example here, you could enter here at support, but again, realizing that they're going to more than likely flush people out and fake people out. So then you would just set your stop below this low here at 1 penny. So let's say you're entering here at 1.6 pennies. You would essentially risk 30% to make 420%, right? So those are great risk to reward ratios. So hopefully this video was helpful. And also we have another example how we can use all these indicators, right? Not only did we have the weekly uptrend, the EMA 12 and 26 bull cross, support in the symmetrical triangle, we had a golden cross lining up on the daily time frame as well. So that's what I mean about using all of these different indicators, patterns, signals, and identifying 8 to 10 of them, and then just see, are the majority bullish, are the majority bearish, and then obviously identifying different chart patterns like a symmetrical triangle, descending triangle, ascending triangle, head and shoulders, inverse head and shoulders, falling wedge, rising wedge, etc. So hopefully this video was helpful. If it was, make sure to leave a like and let me know your thoughts and opinions in the comment section below. Obviously, this is probably going to sound very foreign, but it starts to make a lot of sense. Like I said, it's just like learning a new language, right? You have no idea. I was like 2 years where, I was like, I have no idea what this chart stuff is all about. And, I thought eventually I started to get it and I thought I understood it, but, what I thought I understood really wasn't it at all. And it took me, I remember having a light bulb, go off, and an aha moment, if you will. And it was just like, oh my God, now I really get it. And then, from there, it's just like riding a bike, right? You take the training wheels off and it's smooth sailing from there. And then eventually, before you know it, you're riding the bike with no hands, right? So, all right, going into there, it's Rod with Pow Group. Thanks again for joining us on the Pursuit of Wealth. Let me know what you think of this style video as well. I'll try to get some more of these style videos out if people enjoy them. Enjoy the rest of your day, and we'll see you on the next one.